welcome to this webinar on FCRA impact. We did one the last time, which was titled FCRA Storm, and we had received an overwhelming response when we had organized the last time, and it's the same this time. We have got more than 2,500 registrations. My name is Sandeep Sharma, and I'm from FMSF, and I would like to welcome each one of you on behalf of FMSF to this afternoon, morning, evening, depending on from where we have logged in. So we have participants not just from India, but we have participants also from different countries, US, Europe, and so on. So warm welcome to each one of you once again. Well, friends, as far as this afternoon is concerned, let me give a brief of how this the whole afternoon is going to unfold. In the beginning, we will listen to one of the panelists who's going to tell us a bit about the larger issues and larger challenges that has come out because of the amendment that has happened, which will be followed by a very interesting presentation on the amendments, very briefly on the amendments, but some of the practical issues emerging out of it. So that's going to be extremely critical and important. And after we are done with the presentation, we are going to look at the larger issues, the challenges that is coming out because of the amendment. So we are going to dig deeper. We're going to dive deeper and see what ramifications does it have for the sector. What are we are going to explore the larger issues as well as look at some of the practical aspects that has come out because of the amendment that has come in. So it is going to be a very interesting afternoon. And after that, for about half an hour or so, we'll have an open house. Unfortunately, it's in a virtual platform, so therefore all of you will not have the opportunity to speak. But I would encourage you, request you to please post your queries throughout, as and when you have something in your mind, you remember to write down your queries and listen to this carefully, that you should write your queries on the chat box and not in the question and answer box. Because I have a team here who is going to compile those questions, and I would like to pick up each of these questions one by one and ensure that it is addressed. So therefore, it is essential that you write your questions on the chat box and not in the question and answer box. I'm repeating again. So that's the modality as far as this afternoon is concerned. Now, friends, let me introduce you to the esteemed panelist for this afternoon. I don't think so we could have a better panel than this to deal with a complicated, intricate subject like FCRA. And especially post this amendment, it has led to a lot of hue and cry in this sector. To begin with, today we have Dr. Manoj Fogla, who is our principal speaker for this afternoon. Dr. Fogla, all of you must have heard his name at least if you have not worked with him. He is one of the renowned, person in the development sector. He's a chartered accountant by profession, a lawyer, a best-selling author, and probably the best legal mind in the country as far as non-profit law is concerned. Welcome, Dr. Fogla, to this afternoon. Then we have with us Mr. Suresh Kejriwal, who is a chartered accountant. He does a lot of work with the non-profit organizations, extremely sharp, brilliant man, and he's going to share his thoughts and ideas with regard to this amendment, and I'm sure it is going to be enriching one. Welcome, Mr. Kejriwal. Lastly, but most importantly, we have with us Dr. Sanjay Patra, who is the executive director of FMSF, a person with more than 2 decades of experience in the development sector. He's also a chartered accountant by profession, but has been heading FMSF since 20 years now, and a person well known in the sector, and I don't need to introduce him any further. So this with this esteemed group that we have this afternoon, I'm sure that it is going to be an enriching one. It is going to be an interesting one, and there will be a lot of learning, a lot of doubts that you have would be clarified. When this act came in and we did this webinar, there were a lot of issues that were handled and a lot of issues that were discussed. But even post that, there were so many queries that we used to receive on a daily basis that we thought it would make sense to have a webinar like this and talk about this issue, which would benefit all of you. So that was the idea behind organizing this webinar, and I'm so happy to note that we have received an overwhelming response. As I said, more than 2,500 registrations are there. I see a lot of people have already logged in, and many more are logging in. We are also on Facebook, so Facebook Live is also being telecasted as we unfold this afternoon. So welcome once again, and without much ado, now I would like to welcome Dr. Patra to share some of the challenges that has come out after this amendment has come in. Dr. Patra, over to you.
Thank you. That was my colleague, Mr. Sandeep Sharma, the Director Programs of at FMSF, with wealth of experience and expertise in legal issues, grant management, and organizational processes. Friends, welcome once again. And I have the privilege to set the context for this afternoon. All of us know why we have gathered here. We have gathered here to look at the impact and possibly the challenges and way forward on the amendments which were very significant in the FCRA in 2020. FCRA is a small act, only 50 sections, but a complex one which compiles, which brings together both finance as well as internal security legislation, and therefore it becomes complex to that extent. This is a major amendment which happened in the month of September unexpectedly. Suddenly it was brought in and it was enacted. Now, after it was enacted and notified on 29th of September 2020, there was large-scale chaos and confusion in the sector in the absence of certain clarity. And broadly, there were 9 amendments, which my colleague, Mr. Suresh Kejriwal, is going to talk about, followed by in-depth analysis by Dr. Fogla. But these 9 amendments had far-reaching ways impact on the way of working of these non-profit organizations. And there was also lack of clarity on various issues at the time of enactment. So when 29th September this was enacted, people didn't know what to do on 30th of September to that extent. One of the major confusions was this whole designated bank account to be opened in a particular bank branch in State Bank of India, which is quite unprecedented. It is a move of a particular branch which was notified inside the act itself, and that was something which was very unprecedented. So people did not know whether to receive funds or not to receive funds now, and so on. Slowly it got clarified with the internal circular being issued. Yet it has thrown open a number of strategic as well as operational issues. So this also we are going to deal with. And there were also a lot of knee-jerk reactions post this amendment, since, for example, the sub-granting was not permitted prospectively. Now, questions are being asked on what would happen to the ongoing sub-grant contract, which is already in place. Maybe part of the funds have already been released to sub-grantees. What happens? How they conclude this whole project? There are also some amounts due from the mother NGO to the sub-grantee NGO, or even vice versa. And now, because of this amendment, it would not be possible to refund the money back or even send money out. There is also inconsistency within the laws. For example, the Income Tax Act still allows sub-granting with certain conditions. And FCRA has now not brought in an amendment not to allow any sub-granting. There is also confusion about what will happen to the funds that are lying with the sub-grantees, and how the money will be utilized or not utilized. We are going to deal with those issues as well. Some NGOs are becoming creative. They are wondering whether they could replace sub-granting with awarding commercial contracts. Well, good news or bad news? I don't want to break now. Let's wait when our colleagues are going to unfold this before us. Administrative expenditure is also another major area of concern for NGOs. The threshold of administrative expenditures have been reduced from the earlier 50% to 20%. And so there is widespread speculation, reworking, a lot of creative accounting going on to recast the expenditure in order to bring down the administrative expenditure, or at least show it within 20%. Exercises of grouping and regrouping of expenses is going on. Suddenly, what has happened is an obscure Rule 5 of FCRA rules to 2011 has come alive. And everybody is talking about Rule 5, Rule 5, Rule 5. And that is being also interpreted in various ways. The inclusion of public servant in the debarred category has also triggered a mass exodus of board members from various organizations, necessitating the reorganizing of the board. People don't know whether they could continue in the board or the public servants should not. There's a huge debate going on about applicability of these amendments, whether it will be prospective or it will be retrospective. These are some of the things, but apart from that, there are a number of operational issues which need to be addressed, and therefore this webinar, like my colleague Sandeep said. Therefore, we decided to have this webinar in order to deal with some of these very contentious issues. And like, that the overwhelming response to these registrations, and we got a lot of registrations. We also have a very highly skilled and expert team of resource persons to deal with these issues. And I'm sure that we will be able to throw more light on these amendments and the way forward and the questions that is in your minds. So thank you for joining in. As more people join in, it's over to Mr. Sandeep Sharma.
Thank you, Dr. Patra. I think, wonderfully summarized the larger issues, the challenges that the sector is grappling with. The year 2020, in some sense, is all about unprecedented. It's an unprecedented year. We've been experiencing COVID. The world is experiencing COVID. And, somehow we are talking about new normal. Also in India, COVID is a major issue. And the sector is, again, has been thrown into another unprecedented situation because of the change in FCRA law, which in some sense would redefine the manner and form in which NPOs operate. So thank you, Dr. Patra, for bringing in those, putting in some amount, mapping some of these issues that are relevant for the sector. And this afternoon, we are going to discuss each one of them. Thank you so much once again. Now, I would like to invite Mr. Suresh Kejriwal to please give us an idea about these 9 amendments. What are the amendments that are there? And what are the issues emerging out of it? This webinar basically is going to focus on practical aspects. So while Sureshji would make presentation, he would also talk about some of the practical implications that has come up because of these amendments that have been made. So over to Sureshji.
Thanks, Sandeepji, for inviting me. Thanks, Sanjayji, for setting the tone for today's discussion. The objective of my presentation is to basically explain the key amendments as well as the clarity brought on the bank accounts by the public notice dated 13th October, and thereby setting the tone for a larger discussion by our panel. So I'd like to share my screen to begin with. Okay. So to begin with, there are key amendments. There are 9 key amendments already effective from 29th September 2020. And these amendments include the amendments relating to FCRA bank account with the State Bank of India, the prohibition on intercity donation from FC fund, the reduction in the limit of administrative expenditure, the insertion of a proviso authorizing department to initiate inquiry at the time of renewal of FCRA, the public servants debarred from receiving foreign contribution, Aadhaar of board members and copy of passport / OCI card holders to be furnished, suspension-like provision for prior permission category, extending the suspension period, and the new provision for surrendering the FCRA registration. Now I will deal each of the amendments, explaining the amendments and the key practical issues arising therefrom. So first I will deal with the amendments in relation to the bank account. So now the amendment provides that the first layer bank account shall be with State Bank of India, main branch, New Delhi, of all the NGOs, irrespective of their location. That means every NGO has to have their first bank account with SBI New Delhi, main branch, in which all the foreign contributions shall be received. Presently, the foreign contribution was received in the designated bank account, but now after the amendment, all the foreign contributions shall be received through this SBI account maintained at Delhi. Now, the ministry, while giving the public notice, has said that they will intimate the SOP and the rules and the SOP regarding the operation of this account. But this is still awaited. But in the meantime, some of the NGOs has already opened their account. And in those cases, the SBI is asking those NGOs to bring the approval letter from the ministry approving this account as their mother account to receive foreign fund. And thereby, those NGOs, though have opened the bank account with SBI, are not able to operate. And thereby, they are in a fix because due to the public notice, neither they can receive the foreign fund in their existing bank account after opening of this bank account, SBI account, and the SBI is not allowing the operation till the approval letter from the ministry comes. Now, it is not clarified how this approval, whether we have to fill up form number 6C or we have to submit an email, because the SOP has not yet been given by the ministry. Now, the second layer account is, they are calling it another FCRA account, and they are saying this account can be used for keeping and utilizing the foreign contribution account. That means whatever you are receiving through your mother account, through your SBI account, you can keep it or you can utilize it also from the another FCRA account. And they are saying your existing digital account can be switched over to another FCRA account. That means your existing bank account, digital bank account, can be treated as another FCRA account for the purpose of this amended act. But in absence of an SOP on this, how we can get the repurposing of this bank account is yet to be notified. Now the third layer bank account is one or more replacement bank account. Now the FCRA Act continues with the provision of authorizing the NGOs to having one or more replacement bank account in a bank of their choice for replacement purposes. And this account can receive fund either from the SBI account directly or from another FCRA account. We understand no intimation should be required for existing replacement bank accounts. However, one should also wait for SOP and amendment rules for intimations, if any, required on this. Now, what are the clarity brought about by public notice? Through the public notice, the FCRA department has clarified that the NGOs are not required to visit to Delhi to open their bank account. They have asked that they can visit any of the SBI branch nearest to their location or any other SBI branch of their choice for taking action in regard to opening of their FCRA account. They have again said that the standard operating procedure to facilitate the opening and operating this account shall be uploaded, but this is still to be uploaded. And they've also said the SBI main branch will not charge any transfer fees for transferring FC fund from FCRA bank account to another FCRA account or to replacement bank account. Now, the public notice also talks about the date of 31st March 2021. The public notice said that the existing FC registered NGO or NGO having prior permission are allowed to open the new bank account with the State Bank of India latest by 31st March 21. That means the new bank account with the State Bank of India can be opened by March 21. And however, once this bank account is opened with SBI, the FC fund has to be received only through this bank account. Meaning thereby, the foreign fund can be received in the present designated bank account up to March 21 or the date of opening of the bank account with SBI, whichever is earlier. However, if no bank account with SBI is opened even after 31st, even up to 31st March 2021, then no fresh fund can be received after 31st March 21 till the new bank account with SBI NDMB branch is being opened by the NGO. So all the NGO must open the SBI bank account latest by 31st of March. Once they open the bank account with the SBI branch, they are not allowed to receive the FC fund through the existing resident bank account. They have to receive only from the SBI account branch. Now the second change is, the key change is the inter-charity donations prohibited from FC fund. The Amendment Act provides that no person who is registered and granted a certificate or has obtained prior permission under this Act and receive any foreign contribution shall transfer such contribution to any other person. Meaning thereby, they are prohibiting any type of transfer by FC registered person to another person. Meaning thereby, the amendment has prohibited transfer of FC fund to FC registered or to a non-FC registered organization or to a person. But the transfer of foreign contribution are also being made for direct utilization by the NGO, like vendor payment, salary payment, for giving financial or in-kind assistance to beneficiaries for their self-use, for transferring to community or the school, the flood relief shelter or the toilet blocks, or the transfer to the exempt entity as per the notification dated 30th January 2020. Now the issue has come up whether this blanket prohibition of transfer of FC fund to any other person, whether that will cover all these transfers as well or not. As per my understanding, the prohibition on transfer shall apply only when the transfer is made to another person for a defined purposes, for a definite purposes. And this prohibition should not apply when the transfer is for direct utilization or is transferred to the beneficiary for their self-use. So this is a key issue for inter-charity donation prohibition. Now the reduction in the limit of admin expenses. The Amendment Act, Section 8 of the Amendment Act provides a cap on admin expenses of 20%, reduced from 50% with effect from 29th September 2020 of FC fund received during that year. The section also provides that the admin expenses may exceed this limit of 20%, but with the prior approval of the central government. The Rule 5 of FCRA 2011 provides what shall be included under admin expenses, and it also provides certain exclusions. There is no change as of now in Rule 5, though it is very much expected that the ministry to bring clarity to avoid some subjective interpretation on what can be included and what can be excluded. Now, what shall be included in Rule 5, as per Rule 5, is to be understood. As per Rule 5, it says if the admin expenses shall include remuneration or reimbursement of other expenses paid to members of the governing body. So this is the first inclusion in the definition of admin cost. Second, they are saying expenses on person for management of the activities, including cost of travel of those persons. Here they are saying expenses on the person for management of the activities. They are not saying expenses on person of the entire team of the activities. That means when they are saying management, that means by analogy it implies that the person who is involved in the implementation of the program or implementation of the activities may not be covered under the definition of inclusion. Now the third inclusion is expenses like electricity, telephone, postal charges, repair, printing and stationery, the cost of accounting and cost of administrating funds, expenses towards running and maintenance of vehicles without linking the same whether it relates to program or not, cost of writing and filing reports, legal and professional charges, and rent of premises, repairs to premises, and expenses on other utilities. So as per Rule 5, all these 8 type of expenses shall be treated as administrative expenses. However, the above listed expenses should be reviewed in the context of exclusion as provided in the provision to Rule 5. Now the Rule 5 first start with this 8 items as an inclusive definition, and then they have a 2 exclusion There's a two proviso and the two exclusion. By first exclusion, they are saying that the expenditure incurred on salary and remuneration of person engaged in training or analysis of field data of an association engaged in research or training. Meaning thereby, if an association is engaged in research and training, then the expenditure incurred on salary and remuneration of person engaged in training or analysis of field data, only these two work. The salary will not be considered as a admin expenses in the case of an association engaged in research on training. The second exclusion is very, very important exclusion for all the NGOs. They are saying expenses incurred directly in furtherance of the stated objectives of the welfare-oriented organization, such as salaries to doctors of hospital, salaries to teachers of a school. So this second exclusion says, if in a case of a welfare-oriented organization, if any expenses is incurred, which is directly for the furtherance of the stated objectives, then those expenses will not form part of admin expenses. Now, this is a very big exclusion. But the issue is when we call ourselves to be a welfare-oriented organization, and what expenses can be said to be directly in the furtherance of the stated objectives. The FCRA Act has not defined the welfare-oriented organization. However, I understand the welfare-oriented organization may mean the program which directly benefiting the beneficiaries. Like for a health program, if we have a health center and we are providing direct benefits to the beneficiaries, our program can be, our organization can be of a welfare-oriented organization. However, the same situation if another NGOs creates a program in which they try to improve the existing government health infrastructures, thereby improving the health facilities of the region, then those NGOs may not be directly serving to the beneficiaries, though may be indirectly serving to the beneficiaries, and those NGOs may not be classified under welfare-oriented organizations. So I understand that clarity is required what is meant by welfare-oriented organization, and then if this is cleared, then I think a huge lot of expenses shall come out within the definition of administrative expenses. Other exclusion means the rule 5 of FCRA 2011, as we have already mentioned, talks about salary for person engaged in the management of the staff, meaning thereby the person engaged in implementation shall not be covered, and the capital expenses will not be part of the admin expenses. And this is also confirmed through reporting of FC4 requirement. So these are some challenges in computing the admin cost, which the panel will take it further. Now, the reporting requirement of admin expenses and the FC financial statement attached with FC4. Under the current scheme of reporting under FCRA 2010, admin expenditures is required to be reported to the FCRA authorities under clause 3.2 of form number FC4. That means since last year, since financial year 18-19, every organization is required to report their total admin expenses through FC4, through annual return. Now, the FC4 also going to be attached to the FC financial statement. And we find administrative expenses as per attached FC financial statement, which are normally prepared as per the donors approved budget rates. The admin expenses may be different than the admin expenses reported under FC4. We understand FCRA financial statement is a special purpose report and therefore should be prepared as per the FCRA requirement, reporting admin expenses as per Rule 5. However, in cases where FC financial statement are prepared differently, then I understand a significant accounting policy should state the policy adopted to classify expenses as admin expenses, and the total amount of admin expenses calculated following Rule 5 of FCRA 2011 should be reported by way of notes to account to remove any doubt in the minds of the FCRA department. Now, the third amendment is a very crucial amendment, is the inquiry at the time of renewal of FCRA. The renewal process are pre-amended situation are on the basis of application submitted and being granted if there is no non-compliance on record. The amendment has made the renewal process similar to that of a registration and prior permission by inserting section 12.4 of FCRA for renewal process also. Now, after the amendment, the refusal of renewal can be made if they are a violation of FCRA Act or FCRA rules as per second provision to section 16(3), or if the organization, if the applicant is not fulfilling all the conditions specified in section 12(4), provision to section 16(1), inserted with effect from 29 September 2020. And there, as the renewal process is already has come, it is very important to understand what is included under violation of FCRA Act, what is included under violation of FCRA rules, and what are the conditions which is covered under section 12(4). So when we talk about compliances under FCRA Act, it is compliances with section 7 that we don't transfer FC fund to another person. We utilize the FC fund for an administrative purpose within the restriction. The foreign contributions are received through scheduled bank. The yearly intimation in FC4 is being submitted, and the books of account, separate books of account as per section 19 are being maintained. When we talk about compliance with FCRA rules, then we have to calculate the admin cost as per Rule 5. We have to submit quarterly and yearly declaration, Rule 13. We have to maintain the books of account as per Rule 11. We have to give yearly intimation as per Rule 17, and we have to intimate the changes as per Rule 17A for the change in the name and address of the NGO, for the nature, aims, and objects, for changing designated or branch of the account number, opening of utilization bank account, or change in the keyboard members. So we have to follow the compliance as per the FCRA Act. We have to follow the compliance as per the FCRA rules, and these are the normal compliances one should follow. From my experience, I find the quarterly and yearly declaration requirement as per the FCRA rules. Though the NGOs are submitting quarterly information in their website, on the website of the ministry, but normally yearly declarations of FC statements are not being submitted. Though they are being submitted with FC4, but there is no separate declaration of FC financial statement in their own website. Now, what shall be included under the conditions of section 12(4)? It basically includes that the applicant organization is not fictitious or benami. I understand we must understand the meaning of benami in the context of the NGO, which I think panel will take it further. The applicant has not been prosecuted or convicted for indulging in activities aimed at conversion or creating communal tension, has not found guilty of diversion or misutilization of his funds, has not contravened any of the provision of this act, has not been prohibited for accepting foreign contribution, has undertaken reasonable activity in its chosen field for the benefit of society out of FC fund. Its director, that means applicant's director or office bearers, has not been convicted under any law for the time being in force, and acceptance of foreign contribution is not likely to affect prejudicially the sovereignty and integrity of India. So basically, at the time of renewal, the department is going to review the compliances under FCRA Act, the compliances under FCRA rules, and they will also see whether the applicant NGO satisfies all the conditions of section 12(4), which is summarized here in below. Now, the next amendment is on public servants debarred from receiving foreign contribution. Under the FCRA Act, there are three categories: the prohibited category, regulated category, and non-regulated category. Section 3 provides a list of persons who are prohibited to receive foreign contribution. The public servant, as defined under section 21 of IPC, is included in this list. The public servant, as defined under section 21 of the IPC code, includes 12 categories of individuals, and therefore the present list, and there will be huge addition to prohibited category of person under FCRA. Now the issue is whether this public servant or prohibited category of person can be a board member in their individual capacity. This issue is clarified by the ministry through FAQs, which says the legal entity of a person under FCRA 10 is distinct from the individual person, and therefore individual who cannot receive foreign contribution may happen to be on the executive committee or board member of an association. Now the last key amendment is the furnishing of Aadhaar of board members and the copy of passport and OCI card. As per the amendment, any person seeking for prior permission, registration and renewal has to provide Aadhaar card as identification document of its all office bearers or other key functionaries. A copy of passport and OCI card holder in the case of a foreigner being a board member of key functionaries. Implication: it shall be easy for the department to know foreigners on the board, common governing body members between NGO and related party on the board. It is to be noted that the FC4 requires details of foreigners as key functionaries, working and associates, whereas FCRA Amendment Act requires furnishing of passport, OCI cards, while seeking for prior permission, registration, renewal. However, whether the foreigner can be on the board, it has to be first understood before fulfilling and before giving these informations and before assessing your own status. Now, the issue is whether a foreigner can be on the board of an NGO. The FCRA Act and rules doesn't provide who can or who cannot be the board member. However, FAQ issued by FCRA departments mentions that organization having foreign nationals other than of Indian origin as member of their executive committee or governing bodies are generally not permitted to receive foreign contribution. That means the department through FAQ has made it very clear that if any foreign nationals other than of Indian origin are on the board, those organizations are generally not permitted to receive foreign contribution. However, the FAQ also provides that in certain cases, a foreigner may be allowed to be in the board member in ex officio capacity, provided it is priorly approved by the ministry. The FAQ has not included foreign nationals of Indian origin from the above restrictions. So these are the few amendments and the few issues which I have summarized, and now I am over to Mr. Sandeep for taking this process forward. Thank you, Sandeep.
Thank you, Sureshji. Thank you, Mr. Kejriwal, for that wonderful presentation. May I request you to, yeah, you have closed your screen. So thank you for the presentation. Very crisp, concise, and very clear. I think no better way to understand the amendments than what you have presented. So lot of issues you have highlighted. Some of the issues you have already picked it up and discussed. Now, as we move ahead, we are going to dig deeper. We are going to critically analyze some of these aspects in a larger scale, in a larger way, and also look at some of the practical aspects of it. But before we do that, I would just like to remind the participants to post their queries only in the chat box and not in the question and answer box, because we'll not be able to take the questions that are posted in the question and answer box. So please remember to post your queries only in the chat box. Secondly, use chat box only for questions and not for any other messages, not for greeting messages, because that would make life difficult for my colleagues to compile the questions when we take it up in the at the end of this session. So that's a kind request to you. Now we will get into the most important aspect of this today's afternoon, and I would like to bring in Dr. Fogla now to the whole discussion and discuss some of this larger issue. One of the important or one of the most significant change that has happened, Dr. Fogla, is with regard to the amendment in section 7. By the virtue of this amendment, the whole manner in form which NPOs used to operate in India is getting redefined. So in that context, I remember asking you this even last time, but this is something that I cannot do away with without asking you once again for the benefit of the participants, that onward granting or inter-charity donation, which was erstwhile permissible, has suddenly been prohibited. So is this legally consistent in your view? You are a legal expert. Do you think this is legally consistent or even rational?
Now, good afternoon, everybody. My understanding in this regard is that if you look at the FCRA Act is about regulating certain persons provided or in order to curb activities which are not in national interest. So that is the objects for which the FCRA Act has been termed. Now, under law, a recipient organization and the donor organization in India, inter-charity donation, both are treated on par with each other. So now, without disputing the legal character, or without creating a separate category of organization who could be subsequent recipient, this particular norm is certainly arbitrary, because charity is being implemented. Charity, philanthropy, the laws, even the civil laws, are based on principles of trusteeship. So the law, including Supreme Court, they have clarified that doing a charitable activity yourself or through a trustee is on par with each other. So when an organization works with another charitable organization, and we under FCRA, there were already reasonable restrictions, because when last time in 2011, when the act was amended, the issue was raised why inter-charity donation was restricted only to FC registered organization. Why inter-charity donation was not extended to unregistered organizations, small NGOs working in remote places of the country. Why should those kind of institutions not be allowed to receive contribution? Because you cannot expect a small NGO in a remote village to get FCRA registration to receive 1 lakh rupee and do all the compliances which Surajji just now discussed. The Indian compliances and regulations are too rigorous. And these are the views of the standing committee of the government of India, which was chaired by the late Sushma Swaraj, the very enigmatic leader and the past cabinet minister of this government. So this was her view. And the ministry had given a reply during that time that FC registered organization will receive money as subsequent grantees, sub-grantees without any bar. And there is a rule 24. There is a rule 24 where unregistered organization can also be received. That is one part. There are many cases. Even last year also there was a case which came into Supreme Court where some organizations gave sub-grants to unregistered FC organizations. The money was received for charitable purposes and it was used through unregistered FC organizations. And the 12-way registration of that particular organization under income tax was cancelled. And this issue was debated in the court. And the court said that giving sub-grant per se is a compliance issue. It is not an illegal activity. And therefore, it was totally unwarranted on the part of the revenue to have cancelled the registration, the constitutional right of an organization to receive fund as a trustee and work. So in that sense, it looks arbitrary. The other issue here is that if you look into the debate in the parliament, the primary debate for blocking this sub-grant is that charitable organizations take from one organization to another organization, the grant is given, from that organization to another organization, and in the process the trail is lost. That is what is on record in the parliament. This is one of the defense given at the time of enactment of the law. Now, how can the trail be lost when the inter-charity donation is restricted to FC registered organization and you cannot give to anybody else? First, and if the trail is lost, then it is about a subsequent multiple transaction. Why should the first inter-charity should be blocked? So in that sense, these are issues which are arbitrary. To my understanding, they are in violation of Article 14 of the Constitution because they are not in line with the preamble and the object for which this act was enacted. How can inter-charity be against national interest? You allow that NGO to receive money from an unknown foreigner directly. That is not a threat to the national interest. But if that organization receives money from an Indian organization which is under regulation and vetted by the FCRA department itself, it goes against national interest. So therefore, I don't think this amendment has a reasonable nexus with the objects of this act, and therefore it is certainly an arbitrary and a challengeable issue. But that is something for the courts to decide. Today, we have to come in terms with the reality that this is the law and we have to follow it till it is withdrawn by the uh, department or the central government, or it is scrapped by some court of law.
Right. So as you said, we have to live with it till the time there is a change happening, even though it has pervasive impact on the sector. Which brings me to the other point. You know, this amendment was made effective from 29 September 2020, and you know, it's like a football match that suddenly in the middle of the match you change the goalpost or you change the rule of the game. So what happens to the existing FC funds, unutilized funds, which are supposed to be sub-granted? You know, many organizations, for example, mother NGOs, they primarily work through a mode of sub-granting. So what happens to these existing funds, what the unspent funds, the tax liability aspect of this unspent fund? How do you see it from a legal perspective?
No, the existing funds, apart from FCRA, there would be various other kinds of legal obligations. There would be contractual obligations between two parties. An organization may claim the funds. The organization, if it is unable to utilize the fund, there would be tax implications. So these are some of the issues. But to my understanding, after 29th September, from 29th September 2020, even the unspent funds cannot be given to a charitable organization as a sub-grantee. And
Right.
these bilateral contracts have to be revised. The donors have to find mechanisms. In some cases, the funds may be given back to the donor. In some cases, the organization may, with the consent of the donor, make the utilization directly. And the organizations which will certainly face problem, for instance, the sub-grantee organization, which were supposed or they have committed to vendors, they have already given job contracts to the staff, they may have hired staff for the a particular project, and that project money is not available. It is well within their right to challenge the arbitrariness of this section, but I don't think without any court of law coming to their rescue, they have any option. No money should be transferred.
Right. So I think the message is very clear that after 29 September, once this has become effective, no onward granting whatsoever is permissible, even if the funds were received prior to 29 September. So that's coming out very clearly. Now, and I would like to bring in another aspect here. Now, this Section 7, you know, what I would like to ask you is that, does it pertain only to funds that you cannot subgrant, or because foreign contribution also includes article or, you know, kind donation. So because they've amended Section 7 and they have talked about foreign contribution only, does it not include assets? So is granting of asset permissible, even though this amendment of Section 7 has come?
And if you read Section 7, it may give an impression that you receive foreign contribution, that particular foreign contribution cannot be given. You may get another confusion that the foreign contribution received by 29th of September is subject to this rule, act and provision, and the foreign contribution received prior to 29th of September may not get invoked or implicated under this provision. But my understanding is that we should not get into interpretation of, because there is another argument which we normally place, that the FCRA foreign contribution includes article, and article cannot be a representative word for all assets. So an investment, a term deposit may not be an article. You cannot treat it as an article. So therefore, an argument is that asset is not a part of foreign contribution. But I think that is not the correct way of looking at it. If you technically look at it, a fund is a liability side item.
Right.
So each fund will be supported by an asset. So when you give FC fund, so FC fund you give, but actually FC fund is on your liability side, and the corresponding bank balance is on the asset side. So each time when you give FC fund, there is a reduction in liability as well as an asset. So in the normal course also, you have an asset transfer. So now we are saying that, is there an intra asset exemption? If I give money from bank or cash, it is attracted, and if I give some other asset, it doesn't get attracted. Or if there is another category of asset, some asset which we had treated as utilized in the past, such assets are not a part of your closing balance of FCRA, whether we can give those assets also. But those assets which have zero value in the balance sheet, they are also a part of your corpus, they are also a part of your assets. So therefore, I don't think it will be wise to make any such distinction, and whether it is asset in the form of cash, bank, or any other form, it cannot be transferred to a FC registered organization, for that matter, any organization.
Right. In the presentation by Mr. Kejriwal, he was mentioning about, whether transfer of foreign funds to end beneficiary is permissible, because this amendment section 7 says that it cannot be transferred to any other person. Foreign contribution cannot be transferred to any other person. So in this context, two questions that I would like to ask you is whether transfer of funds to end beneficiary is permissible, and secondly, whether transfer of foreign funds to FCRA exempted body. So there is also exempt category. So whether FC funds can be transferred to exempt category, and this amendment doesn't apply.
No, FCRA, application of FCRA comes from two terms you should understand. The FCRA will apply if you are covered under the definition of person. So definition of person, there are four players in that: an individual, an Hindu undivided family, a section 8 company, and association. And association is a residual category where it is said that any type of organization, whether registered or not, will be covered under that. So therefore, there is a pretty large universe of the persons who cannot receive foreign contribution only if another condition is fulfilled. The other condition is that these people should receive foreign contribution for a definite purpose. If you are not receiving foreign contribution for a definite purpose, you can also understand in another language that when you receive foreign contribution as a trustee. So when you receive foreign contribution as a trustee for some charitable, religious, cultural, scientific, social work to be executed, then FCRA law applies. So when a person receives money for self-consumption, then FCRA law would not apply, because that money, that person is not a trustee of that money, that person is the consumer of that money, and utilization happens. If that were not true, then the entire FCRA law will stand defeated, because you cannot ask a poor beneficiary whom you give a financial support or 1 month's rise or provision to survive during COVID. You cannot ask that person to bring an FC registration to receive that. So that could not have been the intent of the act, and the provisions also are not saying that. So to my understanding, any organization, any person establishing that the organization itself is the beneficiary, then FCRA law will not apply. But unlike commercial law, it will be virtually impossible for an organization to claim itself as beneficiary. Under commercial law, an organization can claim beneficiary by opening an industry in a backward area. Backward area, an industry is opened and the organization receives subsidy from government. So that subsidy received by the government is again a self-consumption. So those kind of payments, organization cannot claim. Organization can only receive fund for charitable purposes as a trustee. So therefore, institutions, to my understanding, cannot receive, but individuals who are legitimate beneficiaries, and the onus will be on the organization to establish that the person whom FCRA was given are legitimate and eligible beneficiaries, and without violating Article 14 of the Constitution, without giving any arbitrary money, a reasonable amount was given to the beneficiary. You cannot give that 10 lakh rupees was given to one particular deserving beneficiary. So those kind of transactions should be avoided. So self-consumption is permissible even after this enactment. I don't think there is anything in the act is there to worry about. Regarding exempted organization, this is again a very complicated issue. Can a government institution participating in a program receive FC money? Can a municipality receive a FC money? So if you read section 7, they cannot receive. The only way they can receive these funds, if they find and are able to interpret that they are not covered under the definition of person. Those 4 categories I said. So this is a cue I am giving. So if a municipality, there is a lot of confusion. To my understanding, statutory corporations, etc., are not covered under the definition of persons. But the understanding of the FCRA department is that they are covered under the definition of person. That is why they issue circular and rules regarding the exemptions to government entity, those audited by. So we're not going into who is covered under section, under the definition of person. If these exempted entities are not covered under the definition of person, then only can they receive, otherwise they cannot receive.
Right. Thank you. Thank you for that. I think it makes it quite clear in terms of what is permissible with regard to transfer of funds to end beneficiaries or exempt entities. Now, because of this amendment in section 7, a lot of permutations, combinations, or at least at the idea stage is going on. Many organizations, individuals are exploring different ways of working. One of which is being talked about, and therefore I would like to ask you, is that whether mother NPOs, for example, the organization which was subgranting, can work directly by giving service contracts to implementing agencies. Now that you cannot transfer FC funds because of the amendment in section 7, whether it can be done through a commercial route, whether service contract can be given to NGOs and programs be implemented.
No. As you have used the word mother, so the mother should always be careful about what the child is doing and how the child, where the child is putting the money and how the child is putting the money. So now in a charitable organization are entitled to do commercial activity, but the commercial activity is an incidental business activity. If it is aligned to the primary purpose, then they can maintain separate books of account and they can do it as an incidental business activity and they become vendors. But charitable organization, in principle, there might be exceptions, in principle cannot do the primary activity on commercial terms. On commercial terms, the primary activity cannot be done. So therefore, giving a contract, the charitable organization can be, the subsequent organization, grassroots organization can be a vendor to supply food, can be a vendor to provide infrastructure. But to my understanding, it is not wise to give a contract saying that you will implement the program on behalf of a mother NGO, because I don't think it will be treated as an incidental business activity in the books of the NGO, and if it is treated as incidental activity, then it cannot sustain its charitable status. So there would be so many questions around it. So therefore, a charitable activity, a composite charitable activity contract should not be given to grassroots organization. They may take one of activities as they are providing a particular service which will be treated as a supply under GST law. They can supply something and take payment against that, but they cannot be the trustee or the implementer of a philanthropic or a charitable or a welfare program.
Right. So I think the underlying statement is that, there is a need to establish the commerciality. If you draw up a commercial contract, you cannot do charity in the garb of, commercial contract by simply changing the contract. The other, reorganizing which is being thought out, or these are the kind of questions that we have received over email in the past, is, whether foreign donor can award commercial contract for implementing the programs. So what are the implications if a foreign donor wants to have a commercial contract?
Foreign donor, we have been seen in the past that foreign donor appoints staff in India to do activity in India. The foreign donor award direct commercial contract to execute activity in India. But if a foreign donor awards a contract to execute activity in India, it tantamounts to doing activity in India. And a foreign donor now under the current amended law after this FEMA came in to June 2000 can work in India under only 2 circumstances. 1, through FC registered organization. 2, by taking a branch office approval from RBI. I don't think there is a third way they can work in India. So therefore, foreign donor for different reasons, that they themselves don't have a right to work in India. Therefore, they cannot work through contractor, whether that right is not available indirectly. So if you are working through contractor, that means you are indirectly working in India. For that also, they should take approval from RBI. So therefore, to my understanding, foreign donor should not do any activity in India directly or indirectly unless they have an RBI approval or they are working through an FC registered organization. If they are working through an FC registered organization, then in context of their legitimate program in India, they can award contracts, they can hire consultants, they can hire evaluators, because they are already existing in India lawfully, they have lawful projects in India. So that how has to be understood.
So one question which is related to this is, can foreign donor, for example, give grants to FC partner, the FCRA registered partner organizations? And because now that the mother NPO, the concept of mother NGO doesn't work anymore in India, so can foreign donors give money directly to implementing organization and give a commercial contract to the mother NGO for monitoring purposes? So is this kind of a combination workable in the revised change scenario?
FCRA, there are no mother and daughter registration. So all registration are on par with the mother registration. So whether the foreign donor works with the mother NGO or any grassroots level small NGO, it doesn't make any difference. The foreign donors can certainly work with any organization anywhere in the country, irrespective of size, provided they have FC registration.
Right. Okay. So let me now go to the next aspect of administrative expenses, which is under Section 8. Dr. Patra, I would like to bring you in here. You know that the limit of 50% has been brought down to 20%. So my question that I would like to ask you, which was also raised by one of the member of parliament during the debate, is can government regulate how much an organization should spend on administrative purposes? So is this the author, even though it is already in force, but conceptually looking at it from legal point of view, regulation of expenses of an NGO, which is not given by government, the funds do not come from the government, but from other agencies outside. So what authority does government have to regulate expenses?
See, this is a very nuanced and a very layered issue. First of all, I think we should understand that fundamentally these are private donations. Private donations which come from private individuals to organizations in India which are private organizations for public purposes. And many times these funds come with a contract, with a grant contract, which are restricted funds. So in that grant contract, there's a budget line very clearly specified where it says, for what purposes, how much will be utilized. So therefore, there is already a framework within which these funds need to be utilized. That is number one. Secondly, there are various types of expenditures that happen. And primarily when an expenditure happens, the nature of expenditure is of natural heads, which are mostly to look like administrative only. For example, when you are doing a meeting of the beneficiaries, then the expenditures that you incur, if the expenditures, the way it looks, would look like administrative expenditure alone, unless there are direct classical charity that happens. So in 2010, when the law was substantially amended, the new FCRA 2010 came in, when the 50% threshold was put, that time in the parliament itself, the government had said that because there are these kind of confusions and there are, so therefore a higher threshold is desirable. Now, when you bring down the threshold to 20% and this whole rule 5, where this whole, it is explained what would constitute the administrative expenditure, but probably Dr. Fogla would elaborate it further in terms of what is included and what is excluded. I'm not going into that, but if you look at that construct of what the rule 5 says, in that the assumption is also that programmatic expenditure to run a program would normally be bundled under program expenses. And this bringing it down to 20%, and when you bring it to 20%, then why not 25%? What is the sanctity of the 20% per se? And bringing it down even substantially, it's more than more than 50% has been brought down. So from 50% to 20% has been brought down, which is a very, very substantial reduction, and without any stated justification. Actually, we are not able to understand why this sort of a drastic reduction has been done without enough justification.
Right. So appears arbitrary quite clearly the manner in which the reduction has been made. Dr. Fogla, so while Mr. Kejriwal was presenting about Rule 5, he said that there are eight heads under which administrative expenses has been defined, and there were two exclusion provisions that are provided. But what I would like to ask you is that how do we determine who has the onus of determining the administrative expenses? Because my definition of administrative expenses might be different from the way the department might interpret it. So where does the onus lie? Who is going to define it?
No, when the administrative expenses first came in 2011, then this issue of defining administrative expenditure was raised in the parliament. And one of the justification given by the ministry was that a limit of 50% was necessary, because these are the words on record in the parliamentary proceedings, and explanation given by the Home Ministry, that because the administrative expenditure can include salaries, there are research institutions, educational institutions, where the component of salary and similar seemingly administrative kind of expenditure could be very high. Therefore, in order to ensure that such organizations don't face any hardship, a very high limit of 50% has been given. The things were other way around. The Standing Committee on FCRA in 2011 said that the limit of 50% was on the higher side. It should be something around 25%. This is what was suggested by the Standing Committee headed by Mrs. Sushma Swaraj. And the other thing they said that the administrative expenditures have not been defined. So Rule 5 is an effort made by the FCRA department to define administrative expenses. So in that sense, they have defined administrative expenses, and to my understanding, this definition has created more lack of clarity, and that this definition has gone out of the control of the ministry and the persons who have drafted this amendment, this rule, which is apparent and evident from the fact that if you see Rule 5, the first 8 clauses, you find that almost everything is administration. And then there are 2 provisions which says that if you are able to claim any expenditure which are directly on program or which are based on data collection, training, some examples have been given. So then those expenditure can be treated as program. So therefore we have a very ill-drafted Rule 5, and based on which we have to determine what an administrative expenses is.
Right.
Keeping this in the background, now I go through, I've been looking various chart of accounts, because the administrative expenditure, the virus comes at the time of passing entry. So for instance, I find many people's designation, a person who is a cluster head or at a district level in a livelihood program or a health program is managing the program. That person could be a health expert, but the title is program manager. So if the moment you say that this person is program manager, then the onus is on the NGO to establish that it is a program expenditure, because the rule says all expenditure, even pertaining to program, if they are related to management of program, they are admin. So clause 2 of Rule 5 says that. If the same designation, because on the face of it, that is a purely program expenses, if that person is otherwise doing only program activity, is not sitting at the headquarters. If you are the same designation, perhaps if it is that chief livelihood officer, then suddenly just by an accounting entry, the onus shifts on the authorities to establish that it is an admin expenses, because all these exercises are done based on your disclosures only, and on seldom one goes to the actual grassroots level expenditure. So one thing would be that all your expenditures should be brought closer to the programmatic realities, and the chart of accounts should be revisited. I'm not suggesting that you should change chart of account to claim admin expenses to be program expenses, but because nobody bothered about this expenditure, under which head they are booked, natural head, program heads. So this kind of brainstorming would be required by most of the organizations, and to bring the disclosures closer to the reality. And not only the disclosure should be closer to the reality, the audited statement should also come in terms with the returns we filed with the FCRA department. So nowadays the audited statement, the donor budgets, and the FCRA returns all have different chart of accounts. So those things will shift the onus on the organization. And if the organization claims something is as admin, then the authorities can only treat it. The organization claims something as program, then the authorities can only treat it as admin based on their finding. Based on chart of accounts, it cannot happen. So that way you have to work. But if your chart of account is analogous to program expenses, program management expenses, all are admin. So therefore, if your chart of account is falling under the first 8 clauses of Rule 5, then it will be extremely difficult to claim them as program expenses unless you are able to establish that they were spent directly at the grassroots level, or they are salaries to a person who has a technical qualification, not a functional qualification. So these are some of the issues one has to keep at the back of mind. I don't think we have enough time to get into the nitty-gritties of this.
Yes.
We can take some more aspects if time permits.
Yes. So, I mean, as you said, we are also running short of time. But last question on this administrative expenditure. This exclusion, this proviso that is provided, it says that expenditure incurred on salary remuneration of person engaged in training or analysis of field data, or association engaged in research or training are outside admin expenses. But what about, this question is something which is in the minds of many participants, I'm sure, and many organizations. What about organizations who are not essentially a research organization or a training organization, but largely work on, for example, awareness building? They don't have a direct program implementation on the ground, and their main expense constitutes of salaries of personnel. So how do you define in such cases? Will that be admin, 100% admin? Will that be program? How do we do it? Last one, very quickly.
No, to my understanding, if you go to the law, otherwise under the income tax or case laws, you should understand that what we are talking. Admin expenses is not an expenditure where it is somebody is claiming that this money was not applied for charitable purposes. So you should distinguish: 1, program expense; 2, admin expense; 3, expenses which were diverted or applied for purposes other than charitable purposes. So now the question is, if the FCRA department is not disputing the expenditures were used for purposes, unintended purposes, if that is not disputed, it is a question from where does the FCRA or the government draw a mandate to get into the micromanagement? Because even the parliamentary ruling, the committee report in 2011, it said that what should be a reasonable administrative expenditure should be left to the donor and the donee. That is written inside the records of the parliament. And to my understanding, it is highly arbitrary to say that we will micromanage your admin, even if it is genuine and even if it is towards the implementation of the program, and without knowing. So to my understanding, these are program expenses, but you have a very badly drafted Rule 5. These kind of organization largely will get implicated, or they will get relief, or whether they are able to satisfy the FCRA department or the inquiry people. What possibly they can explore is that the proviso to the Rule 5, they say that they have given two example. If you see the second proviso, it says that salary of a teacher, salary of a doctor, those kind of salary will be excluded. So in other words, if I interpret that, a salary of a teacher or a doctor are the persons who are directly working on the objects. A doctor directly works with the patient. A teacher directly works with the students. So that way, a research person, if it is directly working on the objects, because there are no tangible beneficiaries. In that spirit also, it should be treated as a program expenses. But these are interpretations, and I don't think we can come out with anything conclusive out of it.
Right. So, okay, let us move to the next bit, because also we are running out of time. In this FCRA Amendment 2020, new proviso 14A has been inserted, and a surrender option. The surrendering option is available for FCRA registered organization. Those who don't want to continue, they can surrender their FCRA certificate. So, how far is this relevant, given the fact that FCRA registration itself is time bound? It is for 5 years. What is the purpose of having this provision of surrendering is one question. Related to it, the other question is that if you surrender, it says that the assets and FC fund, whatever is lying with such FC registered organization, once you surrender, it will be vested in the hands of the government. So on both these aspects, quickly, sir, what is your view? Legally, how do you see this?
No, it is quite surprising that the FCRA Act has been changed where cancellation and surrender have been equated. So the vesting of asset, the section there, the word surrender has been added along with the word cancellation. That means normally in case of cancellation, the assets vest in the government. That is the law. But in case of surrender, there is no non-compliance. Cancellation will require a violation. There has to be a finding. There has to be a coercive order against the organization. So whenever there is a coercive order and there is a violation of FCRA, the law gives the right to the government and the FCRA department to confiscate the asset or manage the assets as permitted in the act. But in case of a surrender, there is no proceeding or a cancellation. So unless there is cancellation, I don't think the government can confiscate this asset where the organization is totally compliant and there are no violations of FCRA, confiscation of asset or vesting of asset. Probably it again looks to be a very arbitrary provisions. And now, in the light of this, even today, if an organization's account is not renewed, so there are two things: non-renewal, cancellation. Non-renewal doesn't necessarily mean that there is a proceeding of cancellation and violations have been recorded against the organization. So just a plain non-renewal will be a far more preferred thing. So an organization should not go for a surrender and invite seizure of assets and other explanation. They may opt for not applying for renewal, and that way also it will be a deemed surrender, and then this provision will not apply. Or organizations have right to use the law to their advantage if two provisions are simultaneously available, and they should exercise that, and they should not opt for surrender.
That's a good cue that you give, that if you wish to surrender, better don't renew. So that's a cue. Now let me come to the issue of bank account, because this has also become a nightmare. But at a larger level, even though we are running out of time, something which is again unprecedented, that the Act defines a bank where you are supposed to receive foreign funds. So can statute give direction that a particular bank can do it, and thereby create a monopolistic environment, and also business-wise detrimental to other banks, for that matter, even other public sector banks? So what is your view with regard to this aspect of statute directing?
On the face of it, it looks to be a provision which violates Article 14 of the Constitution. Though there is a debate that government corporations should also be treated as state under Article 12 of our Indian Constitution. That means they are kind of allied government entities. But State Bank is a commercial entity and they compete with private banks. And giving a monopolistic situation, it is arbitrary from to the other banks. It is arbitrary to the consumers because the consumers don't have a right to choose, and it will allow State Bank to misuse, possibly use the dominant position which have been seen in the past. For that matter, State Bank has been notorious in the past in charging. In 2000, if I were to give you statistics, in 2017 and 18, State Bank collected 2,400 crore rupees from as minimum balance penal charges. The organizations, poor people who were not able to maintain a minimum balance of 3,000, 2,000 rupees, the entire balance was taken away by State Bank, and 2,400 crore rupees, it is an astronomical amount. Then the issues were raised that if a penal charge was to be collected from the customers, it should commensurate with the cost of the services you are giving for maintaining their account. Why should be an astronomical figure? And even now, I think the minimum balance exemption is only on savings bank account, and FCRA mostly banks are insisting for current accounts, so that thing will be there. There is a major chunk which organizations negotiate, big organization, where the foreign exchange rate, the banks are notorious in not giving appropriate foreign exchange rate, and the credit given by them, that is one big gray area where the small consumers suffer. There is no transparency. No bank gives that each and every client was transferred at a particular foreign currency rate. They give different rate to different clients, which is unfair, because the bigger ones are dominant. They can negotiate with the bank the exchange rate. The bigger NGOs can negotiate, but the smaller ones cannot negotiate. So these are the kinds of disadvantage and arbitrariness which will create, and it will certainly create a monopolistic situation. So whether the State Bank misuses or not, that is a separate question, but certainly the State Bank will be in a position to exploit its dominant position. I think it is certainly again a amendment which probably government cannot mandate. I must add one more thing. There is one section 43 under the FCRA Act which says that the government can use other government agencies for implementation of the act. But that is from an investigation point of view, because those people in the act, it is written that they will have the power of a police officer. But State Bank being a commercial organization, one more thing we should not forget, that State Bank has made public issue. Common man, foreign investors, all are the shareholders of State Bank. So government is also giving benefit to those shareholders by giving this kind of a monopolistic situation, which is totally unwarranted, and it should not have been there in the statute. But under what wisdom government has done it, whether it could be quashed, first somebody should come forward to challenge it, then we have to see how the courts interpret it.
Right. So till the time that happens, something of, which is also operational, Dr. Patra, can I ask you this? Now, in terms of the procedure of opening of account in State Bank of India, there is some kind of doubt going on, whether you need to intimate to the FCRA department. Sureshji also made a presentation and he talked about this a bit. But what would be the likely procedure? Once you open an account in State Bank of India, do you need to intimate? If you need to intimate, in what form do you need to intimate? What is the procedure for that?
Well, what we have been informed is that the State Bank of India, after the bank account is opened, is not allowing any transaction until and unless you produce a letter from the ministry, from the FCRA department, that this is now your designated bank account. So in order to have that letter from the ministry, from the FCRA department, the form FC6C has to be filed with the department, and once that is filed, the FCRA department would then issue a letter to the organization with a copy to the bank that from now onwards this will be your FC designated bank account. And on receipt of that letter, the State Bank of India would treat this as your main designated bank account. So that is what is happening. In recent times, some organizations in Delhi have already opened their bank account, and at least few of them have got the approval from the ministry as well. So that would be, seems to be the process to go forward.
Yes, but just one more question on that. When you are filing it through Form 6C for the change of bank account, will the existing designated bank account is already there? So will that not affect a change? Will that not be deleted? Because many organizations are worrying out for that reason.
Yes, I think that's a valid reason to worry, because in the amendment it doesn't say that the existing bank account will become go out of the system. So the amendment says that the existing FC bank account will continue to exist, but the problem is that the moment the designated bank account shifts from the present one to the State Bank of India, that account might get deactivated from the system of the FCRA department. What internally we have understood is that they are working on a system where that will still remain. But till such thing happens, there is a concern that is a valid concern, but hopefully it will be resolved soon.
Right. Sureshji, I wanted to bring you in here with regard to bank accounts. You talked about it in your presentation as well. When you apply for a fresh registration, you need to also provide a bank account. When you file FC3, you need to open a bank account. So does it mean that any new application one would make would have to first open a bank account with the State Bank of India, New Delhi branch? How does that going to work?
As per the public notice of 13th October, they have touched upon this issue. And what they have mentioned that the organization which are going for a first new registration, they should be required to open a bank account with SBI only if the FCRA is granted to them. Meaning thereby, the FCRA bank account with SBI can be opened only when they have a FCRA registration number.
Right.
So it is not yet clear at the time of making application whether the NGO has to open any account or not.
Mm-hmm.
I think we should wait for the SOP to come to have a clear idea on this. But as per the public notice, it is very clear that the SBI bank account to be opened once the FCRA registration is obtained.
Right. Okay, so on bank accounts, maybe we'll again take it up when we are getting into that open session, question and answer session. I have received many questions from the participants. My colleagues are compiling it, and I just wanted to tell you that if need be, we'll go beyond 5. We are not going to end this webinar till we answer the last question, so don't worry about time. This is something extremely critical and important that we are discussing, and therefore I also don't want to hurry up things and abruptly close discussion on important aspects. So allow us some time, and we will take up the questions later on and might go even beyond 5 o'clock. So that should be all right. Now, Dr. Fogla is back. I would like to touch upon this issue of public servants, which Mr. Kejriwal has already presented as well. I would like to ask you is that whether board members of NPOs would be considered or would be treated as public servant. I hope you remember the Lokpal when it had come. It said that even NGO functionaries would be treated as public servants. So in that context, do you see a relation coming in there? Will board members be treated as public servants?
No. Because public servant, it is said that it is as defined under section 21 of the IPC, and section 21 of IPC doesn't include board members. It may include certain type of employees of universities which are funded by government or controlled by government. Bearing that, I don't think any person of a private entity. You should understand that NGOs are private entities for public purposes. They are not public institutions. There is a myth. We think that charitable institutions are public institutions. No, they are private institutions for public purposes. Their board member would not be treated as public servants.
Right. Mr. Kejriwal had clearly said that there is no bar on public servants to be on the board of NPOs, and he also referred to the FAQ. I would not like to discuss that. But what I would like to ask you is that, is there a prohibition on, being an office bearer of the board, for example, for public servants? Is there any kind of prohibition for being an office bearer in the board?
On the face of it, an office bearer, public servant should not be an office bearer. He should be an independent honorary member. But if you speak technically, then it will depend on the service rule and the type of contract. Not all contract bar a person from earning from other sources. So the law cannot say that I have given you a particular, because the government has appointed you as an arbitrator and you have some limited functions. So the service rule and the terms under which a public servant is appointed, that will be important. But in general, we should take it that way, that a public servant is should not hold any office of profit or a service providing position. That should be the general rule, though there is a possibility of an exception, but that will be subject to the bilateral contract and also mostly approval from the authorities under which that person is public servant. For all practical purposes, it is not possible, though it can't be ruled out.
Right. I think that gives a lot of clarity. Now, let me get into the other issue. Section 13, this whole issue of suspension period. Earlier, it was 180. After this amendment, it has been extended to 360. What I would like to ask you is that what happens of those organizations, for example, who were suspended before 30th September, and let us say the 180 days period of suspension is already over. Will it mean that another 180 days will be added to those cases also?
No. Let us take three categories. One, organizations whose 180 days expired before 28th of September. Those organizations, their suspension time is over. So their suspension automatically is lifted. FCRA department should lift it. So there will be no cause of action. Those organizations who were suspended in the old act, but the 180-day period is continuing, and those organizations which will be suspended after the enactment of the act. These two categories more or less come under the same footing. But let us not presume that we have a 60 days. The date has not been extended by another 180 days. The law just says that in case of suspension, the suspension proceedings can continue up to 180 days. Plus, it may be extended for such period not exceeding 180 days. That means the additional period could be 50 days, 90 days, 150. The additional period window has been opened to the FCRA department, and that window also cannot be used as a discretion on case-to-case basis. The date has to be specified. So as of now, that date has not been specified. So if that date has not been specified, the number of additional days have not been specified. So as of now, to my understanding, it is 180 days. Very soon, there might be a specification where the government may specify that this is the additional period which will be used, or they may make some rule by making categorization or circumstances under which they will extend the period. So for that, we should wait. As of now, it is 180 days plus possibility of 180 days more if as specified by the central government. That is the law. To my understanding, all ongoing suspension whose 180 days were not completed on 28 September, if specification comes, their period could also be extended.
Right. So two more questions before I get into the session where we will take up the questions from the participants today. One is with regard to these branch offices of international organizations doing sub-granting work in India. What will be the implication to such branch offices of international organizations because of this amendment that has come in, Dr. Fogla?
To my understanding, branch office are not directly coming within the purview of these amendments, because branch offices of international agencies need FCRA registration only if they receive foreign contribution from sources other than their headquarters. So if a branch office is surviving based on inward remittances, it does not require FCRA registration. So therefore, it is not under the purview of FCRA. I know certain branch offices in the country, they have taken FCRA registration and they report even the inward remittances as FCRA receipts. That is legally incorrect, and there is nothing in the law to make legal corrections. At any point of time, you start doing the correct legal thing, that is the appropriate way you should do. So even if you are showing something by mistake as FC contribution, but in reality it was not FC contribution, you should start showing it as the outside the purview as in inward remittances, as long as you have the approval from RBI. So that is one part. Branch offices mobilizing funds directly in India from international sources. Some branch offices, they receive funds from their headquarter, also from sources other than headquarter. Those funding and sub-granting from those funding will get implicated under FCRA. There they have to be careful, and all whatever we are discussing to that aspect, it will apply to them. If a headquarter of the branch office does the fundraising from various donor and the money is collected at the headquarter level and that money comes as inward remittance into the country, again FCRA will not apply. So that is how maybe a branch office can organize themselves and plan to handle and get in terms with the new amendment.
Right. So this amendment, as you were talking about it, amendment normally has prospective implication. But in some sense, this amendment would also have retrospective implication, because the contracts that were already there, which were valid, suddenly has become invalid because after 30th September. So one aspect is about this, tenability of this whole issue of retrospective impact of this amendment that has come in. But what I would like to ask you is that because of this situation, will repatriation of funds outside India be possible? Because if now that the contract can no more be honored, can such grant making organization refund funds to the original donors based outside India? Repatriation, is it possible?
Now, giving money back to the donor is an issue independent of the amendments. I don't think the amendment has anything to do with whether an Indian registered organization can go give the money back to the donor. Generally, the perception is that in India, the law is one-way traffic. So whatever comes, it doesn't go back. So that way, people fear giving. But FC money and FC utilization, if the money comes, it cannot be utilized in a manner other than prescribed. But contractual payment, repayment, you give money to the vendor, FCRA doesn't apply. So under the contract, there is a failure in the contract, there is a term in the contract, under such circumstances, unspent balance should be given back to the donor. You follow the term, there is nothing under the FCRA law which stops you in executing bilateral contracts. But if some payments are large and the payments have happened due to violation of a contract or as exceptional circumstances, then some organizations prefer to take permission from the FCRA department. In the past, they have issued approvals for repatriation. But if I read the FCRA law, I don't think there is anything in the law which says that repatriation is not permissible.
Right. Well, practically it has been subjective, I must say. Earlier years under Section 50, such permissions were being granted, but of late, since last 2 years, we have been realizing that transferring funds outside India, such permission are not granted by FCRA department. So that is where we are, and I would like to move on to the next segment of our webinar, which is that I will take up now the questions that has been raised by the participants, and I will invite all three panelists to answer these questions that have come up. So the first question that I'm going to read is that, what impact will it have if government doctor or teacher are paid expenses for attending trainings? Also, can we pay kind honorarium to them? This is in the context of prohibited the government public servants being on the board or of the NPOs. So I think it is in that context it is being asked. Number one is that can honorarium be paid? Number two is that, if for attending trainings and so on, whether expenses can be paid for that purposes. Sureshji, can you take this up?
as a utilization, as a FC utilization, you can pay against the services being rendered. But if the recipient comes within the definition of prohibitory category, then the issue comes whether if they are debarred from receiving foreign contribution, whether they can receive payment in lieu of services rendered. If that is the question being asked, then Section 4 of FCRA Act exempts or allows prohibited category person also to receive the payment in lieu of services rendered. But at the same time, Section 3, which prohibits prohibitory category person to receive contribution, they also prohibits NGO to make directly and indirectly funds, FC funds available to the prohibitory category. So in this context, if the amount of remuneration being paid to those persons are not found to be reasonable or found to be excessive, then in those cases that may be covered under Section 3. So the challenge would be to justify the amount of being paid, not the payment as such.
Right, right. Yeah. So I think that was with regard to the prohibited person question that had come. Now, with regard to inter-charity donation, Dr. Patra, you work with so many NGOs, all over India, and you know them very well. So one question that is being asked is that can a mother NGO conduct the project activities directly by engaging the staff of partner organizations, since subgranting is not allowed? Now that the subgranting is not allowed, can the mother NGO directly contract the staff of partner NGOs and work?
So if you write like this, the question, then obviously the answer is no. The law, the intent of the law cannot be defeated by you saying that, okay, I will take the staff of the NGO, other NGO, and I will implement. I think that that itself, your question, the answer is in your question itself. So basically, it cannot be done like that. The intent of the law is that you have to implement yourself. For implementing, if you are hiring staff and incidentally those staff were working in the other NGO or not, those kind of things we cannot comment on. But the intent of this amendment is that the NGOs would directly implement programs and not subgrant to another NGO. So that needs to be kept in mind. Your books and records and everything should also reflect that you have actually implemented these projects yourselves.
Right. I think this we dealt with it also, but again, Dr. Patra, since it has come up, will payment to for-profit organizations engaged through service contract be in the nature of subgrant? Will giving money through commercial route be considered as a subgrant?
This is a good question, because we need to again emphasize. See, you were subgranting. Now suddenly subgranting is out, so you make a commercial contract, which means that what you were doing earlier was correct, or now what you are doing is correct. Now so in some sense it will be a circumvention of the law. If the earlier you were doing subgranting and now you are trying to do it through commercial contract, so then you are defeating the whole purpose of this amendment, how bad it may look like in our eyes. So therefore we would suggest that if the subgranting was being done earlier, it cannot be substituted by a commercial contract now, both from a contractor's perspective and a contractee's perspective. From a contractee's perspective, there are other laws, like their income tax registration might get, exemption might get affected, GST will apply, so many other issues are there from a contractee's perspective. From a contractor's perspective, it might appear that you are trying to circumvent the law.
Right, right. Dr. Fogla, I think you dealt with this subject, but I think this is something which is important and it has been raised again. The question is that, since no transfer of FC is possible, whether NGO can utilize foreign funds for construction, maintenance, repair of government facilities, for example, construction of Anganwadi, government schools, etc. Or also if any fund is transferred to the government for joint projects. So is it possible? You have dealt with it already, but maybe very quickly if you can.
No, but we have to understand this question is highly nuanced, because now, as we discussed earlier, that when you give fund, one, the government or the municipality itself should not be a beneficiary, because we cannot establish that that money was applied for charitable purposes. Two, the funds cannot be given as a trustee to these institutions, but in a joint program where the villagers are the consumption, one particular Anganwadi is created where some money is put by the NGO, some money is put by the government, the land is contributed by the villagers or the government. I think these are end consumption program, and I don't think the law or the intent both are suggesting that we should not be doing such program.
Right.
And as far as municipalities are concerned and other government institutions are concerned, probably they are not covered under the definition of person under FCRA, but that is a subject matter of debate. Therefore, we are leaving it open. So that way, to the extent they can be treated as end utilization, where the directly villagers are being benefited, I think such program can be done.
Right. I think you also talked about, when we were discussing this aspect, that ultimate beneficiaries, if it is given, that is permissible. So I think it is in that context it is being asked that, if the objective for which the FCRA grant was received was to extend the grant to other NGOs for incubating them, and can then these NGOs be considered as ultimate beneficiaries and will and therefore not be a sub grant? Can NGOs be considered as ultimate beneficiary?
NGOs cannot be considered as ultimate beneficiaries, because by their constitution, they are organizations. Because NGOs, you have to understand, NGOs, technically you should understand that NGOs are three types of NGOs. One, trust, society, and company. A trust is an unregistered organization, except in one or two organizations. So in India, we don't register a trust, we register the trust deed. So one, unregistered. A society is a registered but not incorporated, a registered but unincorporated organization. And a company, Section 8 company, is a registered and incorporated entity. So a registered and incorporated entity only have an status of an artificial legal person. A trust and a society are owned by the members, are represented by the members. They don't have any legal identity. A society doesn't have legal identity. So therefore, if the NGO itself becomes the beneficiary, the member will become the beneficiary. So all money with the NGOs are set aside for charitable purposes, whether it is corpus donation or current year grants. Everything is for public charitable purposes. Therefore, NGO to that extent can be a beneficiary when we say that it is a corpus donation. But that corpus donation also is set aside for public charitable purposes. So therefore, the NGO will become a trustee rather than a self-consuming beneficiary. So I don't think that self-consumption route will apply to NGOs.
Right. Right. So one thing related to this, also I wanted to ask you, the question that has come is that, support to SHG groups or farmers, producers organization out of FC fund, will it be a violation now because of this amendment?
Now, this is a question that supporting the farmers and supporting a producer society. So to my mind, producer society will come under the definition of person, and if you give them money, the money will be for a definite purpose of distributing amongst its members. So that is how. So then there will be a definite purpose, because that producer society itself will not be the end beneficiary. So that is a contentious area. I don't think FC money should be given to such registered entities for further distribution. The organization may directly give such distribution, if it is reasonable otherwise, to the members of such producer society, but not through the society.
Not through the society. I think that's very clear. Sureshji, I would like to bring you in here. And with regard to this administrative expenses, the computation of 20%, now is the calculation based on the foreign funds received during the year or spent during the year? How is the calculation done? What is the basis? That is question number one. And question number two is, now that this act has come into being in the middle of the year, will 20% be applied or 50% be applied for calculation purposes?
Actually, this is a very tricky depend because of the present provisions. Section 8 says this cap of 20% applies to the foreign contribution received during the year, not on utilization. Meaning thereby, if you have received foreign contribution year 1 and you are going to spend in subsequent year, then subsequent year there is no available limit to spend on admin expenses. So because of this practical dilemma, though the Act provides the limit on the receipt basis, FC contribution received, but the NGOs are practically implementing on the basis of utilization. Okay, whatever they have utilized, they see whether it is 50% or 20% of that utilization amount or not. Because receipt is not coming to a practical situation. But theoretically, the law says the cap is on the foreign contribution receipt, not on utilization. Right. So if we practicing on utilization, then after 29 September, the limit of expenses after 29 September will go to 20%, and up to 29 September, it can remain up to 50%.
Yes, plus it says received during the year. So therefore, if you are spending, for administrative purposes out of your FC balance of the previous year, how will this computation happen? And
yeah, if you go by receipt calculation, then if you anything received before 29 September is not coming within the purview of this cap. Then whatever you received before 29 September is not subject to 50%. It's not subject to 20%. It's subject to 50%. But but that practically not being in use by most of the NGOs because of the 1 year grant is used in the subsequent year. In most of the cases, the remittance comes in the month of January, February, March. So this creates a dilemma. So I think this needs this provision of using the cap on utilization or receipt needs further clarity. Right. But I think Manoj can also add to this point whether this cap should be on receipt or on the utilization.
Yes, Dr. Fogla, I was asking this whole calculation because the Act says that 20% of the received during the year. So is it on received or is it on utilization that this whole calculation will happen?
And I think it is an unintended slip because if you see the FC4 statement is also receipt and utilization. So utilization is a corollary word to receipt. And the FCRA Act is based on the principles of receipt and utilization. And in the long run, it is an cutoff issue. In the long run, whether you use receipt or utilization as a benchmark or yardstick, it will fall in place. Ultimately, you have to spend 50% under the old law, 20% under the new law, except you receive corpus donation. So if you receive corpus donation, then only you will have any advantage in the long run. But because of the use of the word, there is a possibility of advantage, or for that matter, disadvantage for this cutoff period, where whether to take receipt, but that will create challenges because organization may have received and not spent anything during a particular year. There would be possibility where the organization may not have received anything and spent in the subsequent year. So in that year, there is no receipt. So then you have to correspond with to prior period items. And I don't think there is an intent in the law to relate it with prior period item because normally you report during the year, receipt and utilization. So then if you try to take advantage, you mess up your things because some year you receive and you don't utilize for that year that limit, and the next year that receipt is not there. So my understanding, most of the NGO have been following this utilization as the yardstick, and that should may be continued. I think it is an unintended slip in the law.
Right.
So therefore, it should not. It may not be advisable to go through that route.
Okay, so I just wanted to inform the participants that many of the questions that have come up has already been dealt with. So therefore, I would not repeat these questions again, especially with regard to this administrative expenses, salary, and so on. This part we have discussed already. So I'm not taking up again as the answers were provided already by our panelist. Dr. Patra, one question that is coming is that, is there any restriction for one person to be a board member of more than one organization? So is there any kind of restriction there? Can one person be a board member of many organizations?
I don't think there is any restriction per se, but like Sureshji in his presentation has said that because of the Aadhaar card, the government would of course know that you are in so many boards or different societies, But there is legally there is no bar
There's no
because
bar.
as independent board member, one can be in many other organizations.
There's
Can
no
I add
age.
here? Can I add here,
Yes,
Sandesh?
please.
In the renewal application, the requirement of furnishing information is if the board member is a member of another organization, if that organization is proceeded against, then this NGO really also in danger because we have to give information on those things. Again, the FCRA renewal also want information, then the associate organization details. So, if one person is more than one NGO member, so those informations has to be furnished in the renewal, and then any violation by the other NGO maybe have its impact on the present NGO. So those things has to be taken into account. Not there is no bar on whether that he can be a member in more than one member or not.
Right.
Yeah. Dr. Fogla, you dealt with this already, but since it has come again, the question is that being a donor organization, do we have to amend the existing contracts of our partners? Do we have to include any annexure to address the FCRA amendments? I think that question is there.
No, whether you make a new contract or use the force majeure clause in the existing contract and undertake the necessary changes as a supplement to the existing contract, but certainly those kinds of exercises have to be done to bring it to a realistic context, because there might be issues which are not possible to be executed, and whatever is not possible to be executed due to some kind of law which has come into force, those have to be factored into the contract, and the necessary corrections under civil law have to be taken. It may be a new contract, but most probably it should be invocation of force majeure clause and doing the necessary supplementary clauses to the existing contract. Probably that would be the
right. So couple of questions on bank account, Dr. Fogla. I'm going to ask you. One is that, is it mandatory for an organization to deposit its total corpus fund or reserve, whatever, to the new SBI FC account once you open it? From your existing designated bank account, do you need to transfer your fixed deposits or reserve?
There is nothing in the amended section 17 of the FCRA which talks about the bank account. Rather, it says that one bank account should be there to receive FC fund, that is the SBI account. Then the other bank account, that is the second kind of designated account, to receive, to keep and utilize. So when the law has allowed this account to keep, why should this give to some other account? So
right.
Since I don't think it is at all necessary to transfer it to the SBI. The keeping responsibility has been given to the next account, not to the FCRA.
Right. Yes. So I think there are two more questions related to this. The answer is quite clear that you don't need to transfer any funds that is already in your designated bank account back to SBI account once you open it. SBI account is for receiving funds from the foreign source. That is what is there. But what I would like to ask you is that, any income that you earn out of FC fund, where will that be deposited? Will it go to the SBI bank account once it is open, or will it be deposited in your designated bank, the existing designated bank account, or can you deposit it in the utilization bank account? Dr. Fogla?
The law applies at the point of transfer. So we are over obsessed with the designated bank account because the transfer happens at the time of deposit or credit in the designated bank account. So if a foreign donor transfers money, you become the owner of the money or the trustee of the money only when it is credited to your bank account. So that is where the transaction happens, and under other laws also we recognize the income only when it is credited to the bank account. So, but suppose you receive some income in cash. So then depositing in the bank account is not a legal transaction. It is a consequential entry because you have already received it. The transfer has happened. You have collected some delegation fee in a 100% FC organization. You have collected some, received some income in cash in an FC project somewhere in the downstream. So, to my understanding, those money can be received in cash and can remain as a part of cash balance and can be incurred FCRA with due reporting. So the idea that each rupee will go and be deposited in the designated bank account, I don't think that is the intent of the FCRA. Whenever you receive money through foreign channel, one, to whenever you receive money as first recipient, they all should come to the designated bank account. But if there are deemed FC means you have generated some, in a savings bank account utilization, you have generated income. How will you generate that income? The designated bank account. Even if you take that money and deposit in the designated bank account, it will be a consequential entry, because you would have already violated the law by receiving it in the utilization bank account, and there is no way that you cannot receive. So I don't think that is how the law has been structured. All money received as first recipient should come to the designated bank account. That is what I understand. All money as subsequent recipient coming through banking channel should be directed to the principal designated bank account. So suppose you sell something, you receive a draft or inward remittance, better to deposit in the designated SBI bank account. But if there is some generation in cash, you need not run to Delhi to deposit that into the SBI designated bank account.
Right. I think that is pretty clear with regard to bank accounts. With regard to prohibited person, I think we have discussed in detail, but there are a number of queries on that, but it's all making meaning the same, that whether public servants, whether government servants can be on the board of the NGOs. This part we have discussed very clearly, that that it is possible. But one question that I would like to pick from here is that whether a member of a legislature, for example, panchayat member, elected panchayat member, or a member of parliament, can they be in the board of a FC registered organization? Dr. Fogla.
Now, the issue is that if the law says that a particular person, because of his occupation, cannot be on the board of a particular NGO, I don't think that is the law. But the person, because of his occupation, from an occupation's point of view, might be barred. For instance, a judge is barred to participate in social institutions while he is officiating as a judge. So that restriction comes from the position of being a judge rather than a bar from an NGO's point of view. So I don't think there is any bar on anybody to be on the board of an NGO, whether it is an MP or an MLA, but this would be honorary and independent person, and this whether they should be on the board should be seen from the other point of view, the position they are holding with the government or legislature, whether that position warrants and allows such kind of holding places in private spaces. NGO is a private space. So from that angle, one must do a due diligence before inviting or accepting a political person to the board.
Right. There are some questions on inter-charity grant, which has been discussed quite in detail. So therefore, I am not sure whether these questions were shared before the discussions were held. One question says that there was a project grant which was approved before September 2020, and now it needs to be renewed. Is renewal of sub-granting permissible? So I think this is quite clearly said that no sub-granting is permissible after 29 September. So even if you have a valid contract, you cannot honor that. So there is no question about renewing a new contract. So I think this is quite clear. This one, can FCRA grant shall be used as revolving fund by FCRA registered body by collective service charge from beneficiaries? Dr. Fogla, this, even though not directly from this amendment, but something relevant to answer.
Revolving fund again is a contentious issue where sometimes you give money to the CBO, where the CBO rotates and they give it back, and again it is given to another SHG or CBO. If you see technically, a CBO or SHG is an association, and association, the definition of association under FCRA Act. So technically, you cannot give funds to an institution to further give loan or grant to their member or in their village or stakeholders, whatever might be the dynamics of this. But having said that, generally what happens, suppose you have a right to give, say, small grant to beneficiaries. There are 10 beneficiaries, 20 beneficiaries to whom you give a small loan of, say, 5,000 rupees each. And these people do have a right to mobilize amongst themselves, form a group, and together make the repayment or whatever. But the relationship in documentation in letter and spirit should be the relationship with the beneficiary, not the association of beneficiary. That is the legal principle should be followed when you are doing revolving grant or working with SGO, that you are working with the beneficiaries, you are not working with the association formed by the beneficiaries. If this principle is understood, I think everything will fall in place.
Right. Uh, One question which is interesting, many of the implementing agencies are hiring employees on consultancy contract. Will this be constituted as administrative expenses, payment to consultants?
No, no, the consultants for what? Vendor payment for what? You purchase a tally software, it will be administrative expenses. You purchase medicine, it will be program expenses. So it will depend on the context and under what position and what purpose they are hired and what kind of delivery and what kind of services they are giving. You hire a person and that person is doing fundraising services, will be admin. That person is directly developing literature which will help the beneficiaries to understand maybe medical issues or health or livelihood issues that might be programmed. So I don't think it can be addressed based on a contract. It would destination of the money and the destination of the supply given by the consultant that will determine whether it is admin or program, not the contract itself.
Right. Dr. Patra, this one, I think there is a lot of confusion with regard to this, and I think it is important to clarify, and what better way than to do it in this webinar, is with regard to application of renewal, whether the time period is 12 months before the expiry or is it 6 months before the expiry. So can you please clarify on this aspect?
Yes, this is a very important issue and this needs to be clarified because there is a lot of confusion around, as you have already said, that there used to be a clause which would say that if there are multi-year projects, then the organizations could apply 12 months in advance in the previously. But that has been amended now. So that clause is no more there. So therefore, let us be very clear that every organization which is due for renewal can only apply 6 months before and not 12 months before. And that is the law, and probably the website also would not allow you to file the application 12 months in advance. So it's 6 months in advance.
Yes, I think this is important that it is 6 months because we receive these queries quite often. I think it is better to clarify that it is only 6 months. One question, Sureshji, which is come is that can organization give loan to, can you give loan out of FC funds to, let's say, beneficiaries? Can loan be given?
To beneficiaries.
To beneficiaries, that is what
for their end use, for their use.
But a loan.
No, transfer includes loan or donation,
yes.
But the purpose of loan is to the beneficiaries for own use. Okay, not for running a program. Beneficiary, we are talking, that means they're for own use. I think the FC fund can be given to the beneficiary for their own use. The fund given can be temporary by way of a loan, or fund given can be permanent by way of a donation. So the issue is the fund transfer should be for the end use of the beneficiaries.
Right. So the next question is that can any board member visit foreign with the financial support of foreign agency? Is the cost of travel of such visit allowed? Can the organization cover the travel expenses of board member traveling abroad? Any one of you, Dr. Fogler?
Now, I must tell you, this is one issue which has created problem not only under FCRA, under income tax also, that board member traveling outside the country. Suppose if they are doing something for program purposes, then it will be activity outside India, which is not permitted. If they are going for fundraising purposes, then it will be administrative expenses. Not be administrative expenses, it will be fundraising expenses. It will be reduced from the cost of the fund raised. So therefore, on the face of it, I don't think board member traveling and then it will be Tribal to board member, whether it is a part of the board member is a full-time functionary and it is a part of the job of the board member to take up international travel, and if that is taken, mostly it should be treated as fundraising expenses and not as program expenses, because anything outside India, even if it is a genuine expenditure under Income Tax Act, also it is not permitted. There is a section called Section 11(1)(c) of the Income Tax Act, which says that to that extent that money will become taxable. So one should avoid this kind of payment under both under FCRA and income tax. And if it is a necessity of the program, better to treat it as fundraising expenses.
Right. With regard to this foreigners on board, I think Sureshji mentioned about it. But the question is that if the founder and president of an NGO who is a foreigner but has a residential permit in India for 5 years and has been living in India for more than 50 years, so could that person be in the board of an NGO? Sureshji, you explained it already, but maybe one line quickly.
The FAQ is very clear. If he is not the person of Indian origin, then the FCRA Act position is very, very clear. The foreigners are not allowed to be on the board. They are allowed only under a specified situation, and that to after prior approval. So if the person is not a person of Indian origin, then I think he has to follow the FAQ issued by the FCRA department.
And seek prior approval.
Prior approval. You have to seek prior approval.
Dr. Fogla, this one, can an organization receive a piece of property as a gift that was purchased by foreign funds? I think we dealt with it, but maybe...
Yeah, but the organization should be FC registered organization.
So if it is an FC registered organization, one can donate a property to another FC registered organization, even after this amendment that has come in?
No, that part I think will not be possible. So now if the money is purchased by foreign money, then the owner can give. So if it is owned by a foreigner, but that means a piece of land, the first grant can be given. So one NGO could be the first beneficiary of that foreign land. So there are two possibilities. A foreigner can gift a piece of land to a relative or a friend. So that is self-consumption. So that will only be subject to intimation, but primarily FCRA laws should not apply. And the foreigner gives for charitable purposes to an NGO. So only the first receipt will happen. The subsequent granting, I don't think will be permissible.
Yeah, as I said, there are a lot of permutations, combinations being looked at. One question that has come in this context because of this amendment of Section 7 is whether NGOs can conduct the program through commercial agencies. You know, now that you cannot sub-grant, can you do it through commercial agency? You dealt with it, but
let me understand. You have to distinguish the incidental activities of an NGO, primary activity of an NGO. Sometimes it is like a question that can a doctor outsource all its activity, including seeing the patient and writing prescriptions. Can the doctor do that? So it is that kind of a thing. NGOs are very specialized institutions through rigorous process of registration, 12A, FCRA, they get the mandate to do charitable activity. So just like a doctor has a mandate to diagnose a person and give prescribed medicine, nobody else has the authority. Similarly, NGOs under the framework of the law, the tax exemptions, FCRA registration, they are the specialized agency. So they should not outsource their primary function, but they can use vendors, contractors as support services, as supplies, as we call it under GST. But the entire program outsourced, I don't think it will be subject to scrutiny, and that other person, suppose he receives entire money. So not only it will be a grant, if it is a voluntary contribution grant, then there is a section 56 under Income Tax Act, which says that any kind of grant or receipt will be taxed at gross amount. So whether that section will apply, whether the entire amount will become taxable, whether expenditure will be allowed. Expenditure normally are allowed which are required to earn the expenditure. Suppose one person takes NGO activity and says that I apply funds on your behalf. So applying funds on anybody's behalf is not a chargeable expenditure against that income. So there would be various other challenges. I think it is similar to the contract that the NGOs be given commercial contract of the entire program. It should be avoided.
Right. So one question which has come is that NGOs use payment gateways to collect the donations online from donors. With this amendment, do you think whether the NGOs can continue to receive the funds through the payment gateways? Dr. Fogla, we dealt with this subject in the last webinar, but since it has come again.
Now the problem is that the government has created an FCRA Act and the SBI account. The intent is very clear that the first recipient and the first fall of money in India should be in the SBI account. So if somebody else is receiving on behalf of an NGO, so I'm not very sure from where that organization is drawing mandate, to receive on behalf of an NGO, because the organization becomes the trustee, that gateway becomes the trustee. If that gateway is State Bank itself, suppose, so State Bank itself, then there are no two persons involved. The designated bank account holder itself is the person who receives the money on your behalf. So that is a larger legal issue. Here I must add also, the FCRA Act is so poorly drafted that a private limited company is not covered under the definition of person. Though the FCRA department argues that private limited company can be covered under the residual definition, that is association, any organization registered or unregistered. But if you see, the omission of private limited company is a conscious omission. The FCRA Act directly says that individual, Section 8 company, HUF and association. So when the company is mentioned, specifically Section 8 company is mentioned, which is a small part of the companies. So suppose if there are 1,000 companies in India, then there would be only 10 Section 8 companies. So the Act says that only those 10 will be covered under FCRA. That means 990 is a conscious omission. So private limited company is a conscious omission under FCRA Act. So in that sense, suppose they can receive, a private limited company being a gateway, suppose they can receive FC, but they cannot do, if it is a FC money, then whether they can do inter-charity. Because earlier inter-charity was permissible, now inter-charity is not permissible. So that way, I think there are a lot of questions and a lot of interpretations hanging around this gateway business. I don't think we can close it in response to a query.
Right. So one question to you again is, in the event of cancellation or surrendering, whatever, what happens to assets which are partly purchased out of FC fund and partly purchased out of local funds? What will happen?
Into two pieces, each asset.
I think that is simple.
And half will come. That is what the law is. Sometimes we see a vehicle purchase partly from domestic fund and partly. So we said that the first two tires and the vehicles part should be in balance sheet and the rear part should be in domestic balance sheet. But that is how the law has been structured. But obviously vesting in government, having said that, vesting in government doesn't mean that the government will take away the asset. The government will have the asset at its discretion, and the government will appoint the authority, and the authority will decide. The authority may decide that the entire asset will continue to be managed by the NGO, or the asset which will be taken away by the government or will be given to some other NGO. So that vesting doesn't mean that the government is taking away the asset. The vesting means that the discretion on how this asset will be managed will go to the government, and obviously those issues have to be sorted out by the authority in whom these assets are vested. So these are, for technical purposes, are relevant. Otherwise, these questions are not relevant. That
right.
Will
so let me get into some real practical questions that has come up. One is that the fixed deposits that we have in FCRA account, do we need to move it to SBI? I think this we said earlier that there is no such need to move it. Will MHA issue, Ministry of Home Affairs issue another FC certificate citing SBI bank account number? Well, that we are yet to see, but most likely something of that sort will happen, which will have to take it to the SBI bank in order to receive funds from abroad. One question is that, Dr. Fogla, that our FCRA registration renewal is under process, which has expired on 22nd September. So before this amendment came in, can we open bank account with SBI branch?
No, you have to sort out the renewal process as such. One, if the renewal has not been made, you should pursue the FCRA department and you should get a order or direction in writing that the renewal was rejected or granted. So that you should pursue with the FCRA department. And once you have an order, then in case of renewal, you don't have any condition the way you have non-renewal. In case of cancellation, there is a condition that for 3 years you cannot apply. But I don't think that kind of time limit is there. So then maybe you can reapply. If there are reasons given to you, you correct those reasons and make your organization compliant if proper reasons are there. Then you reapply, then only you will be eligible. In case the order is arbitrary of non-renewal, then maybe you should consider moving a section 32 revision petition with the FCRA department. It is not advisable for a renewal to go in a writ or to antagonize the FCRA department for such. In the past, it has been seen through revision petition also renewal has been granted. So you have to do this kind of processes and running around before getting the right to open the FCRA designated a bank account in SBI.
Right. The other question, I think we have discussed quite a bit, but since it is very specific, it says that if FCRA grant is used for research and study, for example, study on slum dwellers in a city, will it be considered as a sub-grant? So basically, if you are giving funds to another NGO for research work, will it be considered as a sub-grant?
Now, on the sub-grant, obviously it is a sub-grant, irrespective of the purpose. But whether a study can be done through a consulting group. Study is a specialized work. Sometimes we hire management institutions, technical institutions to do a study. So depending on the nature of the work, a competent consultant may also do this particular thing. So that way it has to be understood.
Right. Can fellowship amount be paid to students from FC funds? Fellowship is an issue which always comes in workshop, Dr. Fogla.
We have been talking again and again that a student is to the extent it is self-consumption, and to the extent a student can be treated as a beneficiary and the amount is reasonable. So the name would not make a difference whether you call it fellowship, stipend, scholarship, whatever is the name. If the student based on some robust and intelligible criteria, the students are identified, and if some benefit has been given, there is no reason why the students cannot be treated on par with other beneficiaries with whom you are working at the grassroots. And if that is so, there is no reason why you cannot give them some money for their own benefit.
Okay, fine. So last few questions that I have is, one is, can we transfer funds to a staff account for travel, accommodation and incidental purposes while going for a field work or deputation work?
Staff accounts should not be used for any kind of implementation of the program. The use of staff account could be confined to whatever contractual right the staff has. Staff, as a part of the job contract, may claim his own travel bills, and that travel bill can be given to the staff. Some travel advance could be given for that particular staff. But program advances, the staff accounts should not be used. Just to give you a small example, suppose you give some cash to staff for programs. Say you give 10,000 to the staff to implement a program. That 10,000 will continue to remain a part of your cash balance of the organization, and the auditor can also certify that 10,000 even though the money is in the pocket of the staff. But if you put the money in the bank account of the staff, that money cannot be certified as a part of the bank balance of the organization. So that is the technical difference. The staff will also receive money for a definite purpose, which is not permissible. So to our understanding, program advance to staff should not be given.
Right. So this one is interesting. If you win an award, international award, and the award is in form of a cash, will it come under FCRA? You know, Dr. Fogla, if you win an international award and award is in form of cash, will it be under FCRA? Do you need an
So
FCRA registration to receive it?
award is a very normally what happens. We misunderstand award and lotteries, because in a lottery or a gambling or some other game where it is a matter of chance. So when it is a matter of chance, then you incidentally get it. Award is something where the most deserving person is identified through a particular process. So now, if a person wins award due to technical competence, whether it can be treated as a gift to that person, because it is certainly a self-consumption thing. A person, for that person's consumption, it has been given, and any kind of gift which is not for a definite purpose under section 11, because that award is not for a particular definite social, cultural, scientific, religious, educational or social purpose. So in that case, technically also FCRA does not apply to my understanding to gifts. So the award will assume the character of a gift at best from the foreign donor. So technically it will not apply, but one has to see from the angle of foreign hospitality and gift. But on the face of it, it is a contentious issue. But my understanding is that if it is for self-consumption, then FCRA will not apply.
Right. So last question, and probably this also signifies or shows how the sector is implicated or impacted because of this change. So can two FC registered organizations with similar objects merge? Because now that the subgranting is not possible and people are looking for creative solution, one solution that is coming as a question is whether merger of FC registered organization with similar object is possible. Dr. Fogla.
Now merger will depend on the type of organization, because the challenges in a merger is that you cannot, a liability can be extinguished, liability can be repaid, but a legal obligation has to be executed. All charitable organizations are legal obligations. So if there is a trust is bound by a trust deed, and the settler has directed it to be functioned in a particular manner. Same with the Section 8 company, same with the society. So what is the nature of the organization, whether two companies will merge, a company and society will merge, a society and another organization will merge. So now, earlier one easier way of merging organization was to give all the assets as inter-charity grant. But there would be some stamp duty implications. Otherwise, that was the easiest thing. But now that is also not possible, because if one organization remains after the merger, then whatever comes from the other organization will become inter-charity grant. So you cannot do inter-charity grant. Then you have to see whether on dissolution money can be, one organization is dissolved and another organization receives money. So whether on dissolution that money can be given, if it is FC money to another organization. I think on dissolution it might be possible, but again it should be subject to FC approval. And the merger and dissolution etc. will be subject to the directions of civil court also in certain circumstances, the approval of the registering authority under which they have been registered. So it is a multifaceted issue. I'm just doing some loud thinking around it. I don't think we can address it here. It requires a seminar in it itself to address.
Right. Yeah, something which is very interesting. The last question that has come up, and probably also signifies the the situation the sector is grappling with. So therefore, looking for various options. I think a very wonderful webinar in terms of the richness of the issues that were discussed. We were able to take each question that were put by the panelists, and I hope that participants are going with a lot of answers or that for questions that they had come up with. What I would like to say at the end is that these are difficult times, but these are legal issues. Therefore, getting into creative solutions which do not have legal sustainability might be an issue, might be a cause of concern for organizations. So therefore, one needs to be very careful in terms of applying creative solutions that you might have just by looking at the questions that I'm raising this issue at the end. So here I would like to end this seminar, close this seminar by thanking the esteemed panelists that we had, Dr. Fogla, Dr. Patra, and Mr. Kejriwal, for providing this input, providing this time with the patience in which you have answered all the questions. Thank you so much. Thank you to all the participants for being here. It's almost 5:30. It's more than 3.5 hours, but we have more than 700 participants still with us, which also goes to show the kind of interest that we were able to generate and hold even till the end of this webinar. Thank you so much. FMSF is also going to organize a special webinar, which will be for the purpose of FCRA renewal, because renewal is coming soon. It is organizations need to apply for renewal. There are a lot of queries coming on that front, and we are going to announce series of webinar on FCR renewal. So stay tuned, stay connected. Till we meet again, goodbye and good evening. Thank you very much.
Thank you very much. Just to say that the recording will be uploaded on the YouTube for you to view later. Thank you very much. Thanks to moderation by my colleague.
Yeah.
Thank you.
Thank you.
Thank you all.